How Muslims should invest £10,000 step by step. So you've saved £10,000 now, however long it took. Now it's sitting idle in your bank account, doing nothing.
You know you should invest it. Every time you start looking into it, you hit the same wall. Is this halal? Is that halal? Where do I even begin?
Today, we're going to give you the exact step-by-step plan I myself would follow if I had £10,000 to invest as a Muslim in the UK. No jargon, no ambiguity, just a simple, clear system that you can act on today.
Before we get into the steps, let me set one expectation. This isn't a get-rich-quick plan. This is disciplined, long-term framework designed for someone who wants to grow their wealth in a way that aligns with their Islamic principles. If you're looking for hot stock tips or crypto shortcuts, this isn't for you. But if you want a real actionable system, let's go.
Step 1, before you invest a single penny, the safety check. The first step isn't about investing at all. It's about making sure you're ready to invest. Do you have an emergency fund? 3 to 6 months of essential expenses sitting in an accessible account? If not, take a portion of that £10,000 and build one first.
Very true to add. Let's say your essential monthly expenses are £2,000. Some people aim for £6,000 to £12,000 to set aside. If that's already covered, the full £10,000 could be available to invest. If not, some choose to split it, building the safety net first and then investing the rest.
One thing I want to stress is, do you have any interest-bearing debt? Credit cards, personal loans? If the cost of that debt is higher than you would realistically earn from investing, pay it down first. This is basic financial hygiene, but it absolutely matters.
Step 2, choose your wrapper, ISA versus GIA. In the UK, where you invest is almost as important as what you invest in. Because of tax, a Stocks and Shares ISA lets you invest up to £20,000 per year, completely tax-free. No capital gains tax, no dividend tax. It's one of the best deals in UK personal finance, and it's available to every UK resident. A general investment account or a GIA has no annual limit, but your gains are taxable above the annual allowances.
But to help summarize, for most people investing £10,000, the answer is simple. Use an ISA. You're well within the £20,000 limit, and everything you earn inside it is tax-free. Step 3, select a Sharia-compliant platform. So Abul, where do you open the ISA that you've just been talking about?
You need a platform that offers Sharia-compliant investment options with Stocks and Shares ISA wrapper. There are a few options available in the UK. Wahid is one I'd to highlight because it was built specifically for this. Sharia-compliant portfolios vetted by independent ethical review boards, available to use within an ISA and a SIP tax wrapper. You can start with as little as £50.
The key thing to look for in any platform is the screening genuine. Who sits on the Sharia or ethical board? How often are the portfolios reviewed? Don't just take the Halal branding at face value. Verify it.
Step 4, choose your risk level and invest. If you're finding this useful so far, consider subscribing. We're building a full library of practical Muslim finance guides on this channel. Now, step 4.
Most halal investment platforms offer portfolios at different risk levels, typically from conservative to aggressive or rated 1 to 7. Here's a general guide. If you're in your 20s or early 30s and you won't need this money for 10 or more years, a higher risk profile could potentially be the most appropriate for you. Higher risk means more exposure to equities, which historically deliver stronger long-term returns.
But just to add, if you're getting closer to needing the money, say within the next 3 to 5 years, maybe tempering your portfolio and going for something a little bit more balanced offers that stability that you're looking for. And if you need it in under 3 years, consider whether investing is the right move at all. Short-term horizons and equity markets don't mix that well.
With £10,000, you have two approaches. You can invest the full amount at once. This is called lump sum investing. Or you can drip it in over several months, investing a set amount each of those months. This is called pound cost averaging. Both approaches have merit. Historically, lump sum investing has outperformed more often than not because markets trend upwards over time. But pound cost averaging feels psychologically safer for beginners. Choose whichever lets you sleep at night.
Step 5, set it and monitor, don't tinker. The final step is perhaps the hardest for new investors. Do nothing. Once your money is invested in a diversified Sharia-compliant portfolio, the best thing you can do is leave it alone. Check it quarterly, rebalance it maybe annually. If your platform doesn't do it automatically, but don't react to daily market movements. The biggest destroyer of investment returns isn't bad markets, it's bad behavior, panic selling, constant switching, trying to time the highs and lows.
Set a monthly contribution if you can. It's great discipline. Even £100 or £200 a month into your ISA builds real wealth over time. And then just let the system work.
5 steps. Emergency fund check. Open an ISA. Choose a Sharia platform. Pick your risk level and invest. Then leave it alone and let time do the heavy lifting. That's how I'd invest £10,000 as a Muslim in the UK. It's not complicated, not flashy, just disciplined.
If you want to get started, Wahed is linked in the description. Halal ISAs, managed portfolios, and a starting point as low as £50. And next week, we're covering the question I get asked more than any other. Is your pension halal? You don't want to miss that one. Subscribe, and I'll see you there.